does show us whether the rest of the US economy, the smaller cap stocks, want to go long. And in this case, well, it's looking better than it was. Let's now talk about the two big markets. We'll start here with the NASDAQ. So the NASDAQ just went boom, just like the S&P 500, boom, straight into resistance. And what a great level for it to hit into the close. I'm sure many people were taking profit here. I don't blame them at all. It hit exactly where we thought it would go to, and it certainly did a good job. And I think this is where we expect some potential weakness to come in. Now, oftentimes markets will try to rally, very, very hard like they did in March. But this was a pretty large move, and I wouldn't be surprised at all to see the market come down first and then move back up. And if it does then move through this resistance, I feel like the bears at this stage will be losing control of what they've done a very good job at, which has been shorting this market. So the next 24 hours, again, becomes pretty important into the options expiration, which we'll talk about in just a moment. But I wouldn't be surprised at all to see some sellers try to commit themselves here. And this is one of those days that I would come into the market, and if it's sitting around this level in the open, I would watch the way it interacts with the next zone up, or even how it interacts down. And I would obviously look for potential shorts. And if it was going long and then it instantly reversed back down, could that be a trap set by Wall Street to then reverse and then must possibly even go long later? I think this is a very important zone, and we need to watch it and need to put a lot of emphasis on it in the next day. The same thing goes for the S&P 500. There's so much at stake here. What have we done? We've come back up to the 4,300, exactly as you guys thought. 4,300 resistance, bam, slam into that. We've also got the 20 moving average. Okay, exponential moving average, resistance, first time it's touched, kind of gone mean reversion. So it's gone back to the mean reversion point, pretty important. Let's now scroll down to the 4 hour here. What's going on here? Well, we have resistance, we have resistance, we have resistance, and we have a big bull move. We've also broken through a downward trend that was present on the 2 hour, which we had in the previous video, and we talked about this. We talked about the coiling, we talked about the 4,200, and we spoke literally about the 4,200 becoming a 4,300 straight after, or probably going to happen after the Fed result, which is exactly what happened. Caused some scare in the morning, then boom, slingshot straight into it. Could we see sellers here? I think there's a high probability that you do, because this is a 1, 2, and a third time touch. Again, traps could be set here. Markets could pull back down, possibly even to the 4,200 or 4,220 or something in here. And then maybe we see buyers recommit themselves at this point. But it kind of makes sense. Again, a lot of bullishness is present. And if we get that and that, wouldn't that be a really fantastic trade? More traps set here, more people going bearish, and then all of a sudden we go bullish, creating possibly an inverse head and shoulders, as many of you will see it, or an accumulation base, as others will see it. It doesn't matter. The point is that you'll basically see those kind of points. So let's have a look at max pain. Where's that sitting at for the close this week? Well, theoretically, max pain sitting at 428. We don't really use max pain every week or anything like that to figure out where the market's going to close. This is where, if all of the options expired, they're in the market perfectly. That is, Wall Street makes optimum money from selling them to us, the retail traders generally. They would close it at 428, pretty much where it is right now. That would be where it sits. Now that's going to change, but I think down here is where the importance is. Look at these strikes. Look at what retail did this week. Huge amounts of orders at 395, huge amounts of orders at 400, huge amounts of orders at 405. Lots and lots and lots of puts in comparison to the amount of calls, yeah? So you can see the fear was really spread. Everyone went bearish, and then the market says, ha 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 ha, suckers, we go the other way. And unfortunately, we suspected that may occur when we started to see how negative everybody was in the markets. So right now we're at resistance. I still could see a sell or rip here in terms of movement down, but I'd also be looking for potential turnaround stories if it does sell. We'll come back, we'll have a look in the next session. Obviously subscribe if you haven't already, so we can go along with that journey together. Let's now also take a look here at Bitcoin. So Bitcoin halving, I think we're kind of in a bit of a crypto winter here. people just don't seem keen on the coins anymore. And it seems to be following a very similar path to after the previous ones. Now, a lot of people say, oh, this halving event stuff's finished. Well, we'll find out about that. I think between 900 and 1,000 days could be an optimum kind of zone if you like Bitcoin. But let's have a look at the movement over the last 24 hours. So we've gone back to a 20 moving average. Okay, interesting. That's forming resistance. Cool. We've got a downward trend line that got broken with a double bottom down the bottom and its previous support. So I guess there's a bit of risk on going into the crypto markets right now. And if you look at the 2 hour and 1 hour, it becomes pretty apparent that seems to be what's occurring. That was a nice breakout. Of course, if it pulls back, we expect some kind of rally demand through these points. And yeah, at this stage, as long as the NASDAQ holds up, it seems to be risk on in the crypto markets. Let's take a look at Bitcoin shorts, continues to decline. So this could be big whales dumping their short positions, ready to go long again. Again, it's a positive, so it's more of a positive. We commented on the last 24 hours, so we've already been following it. And I think it's worthwhile keeping in the looks. If you haven't already, follow FX Evolution on Twitter and also come into our Discord community where we've got almost 8,000 people in there sharing ideas, sharing economic charts. Many of the charts we post here are actually shared from the community, and I just look at them and I go, yep, that makes sense, and I add it into the day. So yeah, come and join us. The links are in the description below and in the comment section. So make sure you jump on over into the Discord. It's a great community, and I think we've got the best one on the internet for traders out there. So definitely come and join us. Let's move over to some other things that are going on right now while we have non-farm payrolls. So expect a little bit of blockbuster fireworks in the morning, 8:30 a.m. New York time, non-farm payrolls, unemployment change. Let's find out what that does. Another huge event. And often leading into these types of events, markets can actually slow. So again, we might see some risk off, and then depending on this number, maybe we see some risk back on. So keep a lookout out there, everybody. I wish you the best in the markets right now. And of course, subscribe, smash that like button if you enjoyed today's video, and we'll see you in the next one. Bye for now.